Okay, hello guys. So in this video, let's do quick structure mapping, and I believe this will also open your eyes to see how things works. So I want you to see this. This is GDP USD 5 minutes time frame. Why I come down to 5 minute time frame is I just want you to see that this thing work in all time frame. So, but the lower you come, the more I think I would suggest that you have to practice structure mapping in a clearer view, maybe in higher time frame, so that you won't be confused because you know how the structure shifts from one direction to another in the lower time frame. But for me, that I've been doing this for years, um, I've been very conversant with the chart. I know what I want to see on the chart, so it will be easy for me to identify this, but it's all through practicing. It's not that you guys cannot do it too, but you just need to take little time for you to be able to train your eyes in a way that you'll be able to see it. So let's dive into it. You can see this is GDP USD. We are in buying momentum. Market was selling, then market switched to buying. So I've done some mapping so that I won't be doing it again, but I'll be explaining. So I don't want to start from the back. So let's start from where I can see the obvious uh, break of structure, because that's supposed to be the first thing. And as I said, if the market is going up, you want to see a valid pullback taken out, the market now close above. This is where we confirm break of structure. So for I believe you understand that. So, and if you want to look at it, you can see that this is the last change break valid pullback market range from here. You can see, then push up, then come back for this low, then break up. So now that we have that, what are we supposed to be looking for? You can see that exactly how market, after we have this break of structure here, you can see that market did not have any inducement. So the scenario that happened here is that instead of market to come back, or it does what it created inducement. You can see that all this move, when market break up like this, no inducement, and market come back, creates inducement, then later go. So this is not break of structure, as you can see, it's not. So because no inducement was involved, as I said, remember this trading is about perspective. It's not, it has nothing to do with being right or being wrong. It's about your own perspective and how you digest it. So it's not about, there's no certainty. There's nobody that has one way of trading that will say this is the only way that the market works. So let's dive into it. So as you can see after we push up, market consolidate again and finally push up. So you can see that when this leg open, then all this consolidation is like, all you need to just look for is just to look for the last pullback that the market did. That's all. Because in the recent, market supposed to do what? Market supposed to come and take out this inducement that was created here, this last pullback that was created here, so that we mitigate this extreme order block, then it will go. But that doesn't happen, so it means the market created another push to the upside. So, and as you can see, we were able to have the minor pullback, because if you look closely, you can see that after all this is what the market did, then push up. But being that I understand that this is a level where market hide liquidity, so that's why I use this as a major inducement. So, and if you still want to use this as a liquidity, sorry, if you still want to use, if you are still using this as your inducement, you are still correct. So this will only serve as your what? As your decisional POI. But remember I said it's 50-50. There's nothing certain. Decisional POI is low probability POI. So, and as you can see, market did what? And you will be waiting for here as your extreme to do what? to mitigate it. But market refused to mitigate this one, it failed this one, and market did what? Market come close to extreme. So sometimes that's why I said market do not promise you that will mitigate your order block. You should understand that. So it's just how we figure it out. And if you look at it, market came back to 75. So if you are worried that market might not get here, you can put your entry at 75% pullback, which is more reasonable, and you can target the upside. So you can look for 1 to 3 or target the break of structure, the next break of structure. So, but in this video, we are not really talking about the entry. So I just want you to see how the pattern repeats itself. So, so you can see that after we had break of structure here, you can see we had break of structure here. So what does market do? Market created from this low. You can see market move like this, and I said you should not buy anything above this low. Market must come below here. So if we are to look for our POI, we need to look for last selling candle, which is this. But the fact is POI must accompany with fair value gap, so this is not valid. So as I explained in my previous video, you can actually watch and you understand. So you just look for the nearest other block with fair value gap, and as you can see, we have a fair value gap here. This is fair value gap. So if I open it clearly, you can see that there is a very tiny gap between these. Okay, yes, there is a gap between these. Okay, it has been mitigated. So this is the only fair value gap that we have. So if we are to shift the other block now, we will be looking at this one, because block must accompany with what? With fair value gap. So, and as you can see, market came there nicely, market mitigate. So if you're taking an entry from here now, like this, at least as I used to tell you, you don't keep your SL below the the other block, because market might still want to sweep that other block. So you give the market a little bit to breathe, a little space to breathe. You are not expected to put it there because it will be too much. So you can just give it a little space to breathe. Then you target maybe one to the next break of structure. So and as you can see, market did what again? Market break this structure. So what are we looking for next? This is the, let's now count it, the pullback that the market did, both the obvious and the one that is not obvious. You can see the market push up. So I don't think we had a pullback here. They are equal lows, so they are not pullback. So these are equal lows. So you can see. So if you are to look at it now, this is your last pullback that the market did. And what are you supposed to look out for? You see the market will create a drama. All you want is you want to come here. Forget all this drama. If you are buying here now thinking this is the other block, it's just a trap. This is SMT. Market will give you small direction and it will fail. So that's why, based on our entry, market use this as inducement, then look at the other block, the one that is next to the inducement, and look at the extreme. This is the extreme. So as I said, this is 50-50, and this is low probability and this high probability. Then as you can see, when market got to this place, market responded a little bit. A lot of people will be buying here, but you see market gave them small hope, and boom, market came down. And you see when market got to the exact level that it's going to, that we said is high probability, the market responded. So remember, we can take our entry here, put our stop loss below this level, so that we give the market little space to breathe. Then you can take an entry to this level. This is also 5 minutes, so it happens in all time frame. You just need to understand the concept. It happens in all time frame and so on. So you can see, then that's exactly, we had a break of structure here. And you see, after break of structure, what are we supposed to look out for? First of all, we need to start from the bottom and start track tracing our pullback. From the pullback, that's when we understand where our other block will fall into. So you can see, So this is the major pullback. So you can see the market is doing this, the market push up, the market come down, the market form equal high. So when market form equal high, even if it doesn't break above it, but it formed equal high, then it means that that low is the last pullback that happened is our inducement. So these are going to be our major inducements, and this is going to be, this level is our minor inducement, because remember, when market comes down, then on its way to come and form this equal high, that's where it created this. So we can use this. So if we use this, it means that we will look for next POI, and as I'm seeing here, I don't think I'm seeing any POI, valid POI. Everything has been mitigated here. So it means that this is the only POI that is available. So, and as you can see, this is low 50-50 POI, then this is supposed to be our extreme. So when I say something is low probability, doesn't mean it's not going to hold, but it's just low probability. That English is clear. So, and you can see this is what market respected this time after taking out this. So in this case, our low will be shifted to this level because market has created another structure above. And after we break this structure up to the upside, what are we going to look for? Look for the last pullback that the market did. Then, as you can see the movement that the market did on its way to the up. You can see, then boom, it broke this structure. Then you can see that this is the last pullback that the market did. So, and it means that by the time the market was still here like this, let's say like this is where you identify your inducement, then your order block, and probably you have your extreme order block somewhere here. So then you see, accompanying with fair value gap, then you see exactly what market did. So market mitigate the fair value gap, but it still responded to okay, market, okay, sorry, I think I've jumped far. So you can see when market take out this inducement, market mitigates this decisional POI because it's the next POI below the inducement, and you see how market systematically went up from here and break this structure. If you look at it closely, some people will be thinking maybe the market do not close above. If you look at it, we had a candle close above this level. So that's why we have break of structure. So it means that this POI is not going to hold again. Even if it's going to hold, it will hold as an SMT. Then this is our last POI. Then this is going to be our low that market must respect it. Why? Because when market was coming up, no valid pullback, no until he broke this level. But when he got here, he pulled back and he continued again, take out this high again. So it means that this is our low. So, and if you look at this place, no leg. So this is the only other block that we had that is valid, accompanied with fair value gap in between. So you can see when market got here, market responded and push up. But because market want to fail or market want to change the direction, you can see market change the direction and give us change of character here. So this is change of character. So that's why I said you have to be very, very detailed. So if you look at it now, some people will be like, it's just a sweep. But if you look at this candle, you will know that it's below this candle. So that's what confirmed this break of structure, because it means that the market has closed below this line. So we had change of character. So, and what are we supposed to do immediately? Change of character happens. What we're supposed to do is to identify our inducement to the sell side liquidity. So we'll start from the top. You can see market was coming down, give us this pullback, give us this pullback. Then when it responded to this level, it gave us this move, and these are the move that the market did. So you can see that we had at our inducement here. This is our inducement because it's the last pullback that the market did. And if we are to look for it, we have to look for our POI. So we can say we have a POI here because it has fair value gap and it's the next POI above the inducement. You can see systematically market mitigates it, give us a small direction, and boom. So, and as you can see, this is our extreme order flow Order flow is the last movement that the market did, not the last buying candle. So I have explained that in my last video. So this is the order flow that the market mitigated. It's also a POI. The refinement of order flow is the order block. So you can see market came to the order block, I think to this level. This is the last buy momentum. This is the last candle that bought before we now start selling. So you can see market went back systematically and did what? And start collapsing. So if you are to take a trade, you can take a trade from here, put your stop loss above, target this low. Because of what? You have the understanding that the market has changed character. Then if you don't know how to do that, also you can use Fibonacci. Then you wait for 75% pullback. That means your entry will be here and your stop loss will be here. Then you can target this low just to save yourself mistake. So what is important is for you to understand the structure mapping. Your entry will be very, very simple. You can use Fibonacci, you can use any other tools to enter, you can use anything to enter. But you need to know the directional bias where the market is going in that particular time frame. So, and as you can see, market tank straight. So this is the current situation of this market now. Now that we have break of structure, this is GDP USD 5 minutes. Now that we have break of structure, you can see market created this. This is the, if you are to trace it, you can see when market mitigate this POI, these are the movement that the market did, or this, then drop down, pull back, then this. So the only scenario we can have here, or the kind of scenario we can have here, is when market pull back and drop again. So market will use this as an inducement, then probably market will come back for this because our decisional POI will have been shifted to this level. The market will mitigate, or market come to extreme because this is liquidity built above this level. So these are the situation that we have here. So GDP USD 5 minutes, and you can see that everything happens the way I explained in higher time frame. Nothing different. It's just a perspective. So all you need is just to see a directional bias that give us this. Then market close above. Then wait for another situation to occur. Don't be too quick to jump into the market. You can wait for 75%. Then you can take entry. This doesn't mean that you will not have some SL, but the fact is this is just uh, the only approach that you need. And for you to be profitable with it, it means that you have to know it, how to identify it, so that you won't be making some technical errors, and be consistent with it. So once you are able to do that, then you are good to go. So that's it for this video. See you in the other one.